Hi, I'm Ken. Welcome to Stock Market Unfiltered, where we take a candid look / funny at the stock market. I'm not letting it go just yet. Won't be long though, maybe. Yeah. Death cross symbol. Oh, I had to draw this myself because if I didn't, it would cost me $5. And she does a lot better job than I do. Angel, I'm referring to, drew that Grim Reaper. Really hard to read. This is RSI. 0, it's 30. On across there. You know what that's about? Prudential. Oh, let it go. It's freaking driving me nuts. I got to stop saying that word. It's driving me nuts. It's freaking all over the computer. It's raining nuts. Okay. It's raining nuts inside. Anyway. Prudential has, so I'm watching the stock market's running pretty good, 259 points right now. So coming to you live during the day, this time, for a change. Prudential has, the brokerage firm I'm looking with, it gives me news feeds, obviously, that I've talked to you about before. Prudential has more things that pop on there than a Dalmatian dog has black spots. Every time I turn around, there's something up there for Prudential. And guess what? There's 2 of them up there today. And they're both green. Both of them say, crossing this line may be considered a bullish event. The other one says, across above this level is considered a bullish event. So that's 2 bullish events, plus the RSI from Monday, Friday, whatever day it was. The RSI was up after we had all this, the death cross. Okay. And if all Prudential Friday morning, or Friday afternoon, when after they had that news from Deutsche Bank over there in Europe, stocks went down. I told you I got Prudential at 75.50. They got to right now at 1:10 Eastern time, $80.93. I actually got up to $80.99. So it's pretty close to the high for today. It's up $1.53. I bought it for $75.50. It's $5, and now it's $80.97. So $5.47 since this symbol appeared. Scary, ain't it? Just think if you had acted on that technical sign and sold it. We're going to talk about my portfolio strategy today. I didn't sell that stock. I bought more. So I'm in it for the long term. It pays $1.25 a dividend. So let's just say you got 1,000 shares of it. Like I said, it costs $77,000 with this. Hit $5,000 a year in dividends. I'm not worried about a stock that's down $3 or $4. I only worry about it if it has bad earnings or something's happening and they give you a bad outlook. Then that might be a reason for it to be going down. If it's got a bad outlook, you got to manage your portfolio. The whole point of the thing is that you'll see all kinds of things pop up. Death cross or head and shoulders, and it's crossed above this event, it's formed this, it's done that, and everybody has a different opinion about it. So I didn't sell Prudential. I bought more, $75.50. It lowers my cost basis. So if you buy more, and it's still a good company, and it's had 3 symbols, technicals, and I just said don't worry about technicals so much, but I'm making a joke about it because you had one that was a death cross. Now if you got 3 symbols that have popped up there in the last couple of days, they all say it's bullish. So what is a stock investor supposed to do? Sell it today, buy it tomorrow? Keep it for a couple of days, sell it because another bad symbol comes up there? You got to have patience and be resilient and trust what you're seeing on an earnings report, and look through the company, do your research. Has earnings per share? Is it losing money? Does it have good cash flow? It's just, I don't know. But funny thing about that is, I think it was yesterday, I was watching one of those business news channels. I think it was CNBC, I believe. I'm not exactly sure what the name of the show is, but at the end of the show, they have their guest give their final trades of the day. And I wish I knew. I'm getting this from CNBC, so I don't remember about, because I was flipping through it and I caught the last few seconds, and I saw Prudential up there on there. Person said, I'd be interested in it at this price. I'd buy it. To me, that just confirms what I've just been talking about. This guy, is paid analyst, or they make probably good money. I mean, do the research and all that. And for this person to come up there and say, I'm interested in Prudential at this price level. That was yesterday. Final trade that they do on CNBC News for that particular segment. So I felt pretty pleased with myself, because I had bought it Friday for $75.50. And it was looking interested to him at $77, $78. So stay the course, be patient. Just because you see a bunch of bad technical stuff on it, that's why I say there's two types of people: there's chart people and technical people. I like to combine both of them together. But be patient. You've done the research, you know it's a good company. As long as it maintains its good company status, so to speak. Like I talk about, sometimes they have earnings every quarter, and they give forward guidance. You can have a good earnings report, and the forward guidance is not very good, and that would cause the stock to go down. If you got a good earnings report and good forward guidance, you're probably okay. And a lot of people are talking about all the earnings reports coming. I think they come out and be great. I don't think so. You know why? Oh, they are going to be great, but why I don't think so is they've all been lowered. I mean, if you lower the earnings expectations of a company, I'm talking about analysts that lower it, and it gets low enough, the company's going to beat it. If you keep dropping the earnings expectations of a stock, when earnings come around, it's going to make it. And when the earnings look good, what does that mean? Stock's going to go up because it beat earnings and the guidance of the, but it's really lower if you look at the last couple of years than what it really should be. But since everybody's lowered it, okay, it's fine. But anyway, I want to talk about the situations, maybe what you do with your portfolio. Because like I said, I'm in for the long-term dividend income. So, and then some people want to manage, like, how much do you put in stocks? How much do you put in fixed income or treasuries or whatever? So right now I've got most of my money in fixed income and cash. It's hard to, speaking of that, you remember when talking about the end of the world from my account, it just started over? Seems common sense, right? I saw something the other day, and I already talked about this, and there it is talking about it on the news yesterday. I said, really? It reminded me of my encounter. Such a simple thing. And people were talking about everybody taking money out of the banks. They were worried about it and positive. They're putting it in other places, like money market, CDs, U.S. Treasuries. Why? This is what I just talked about not too long ago on this exact channel. Why am I going to buy a stock that may go up or down? Because that going up and down don't really matter. It's the dividend for me. But for those that trade stocks up and down, if they don't make it 5% or 4.5, why not move your money to a money market or a U.S. Treasury, right? Why? Because it's paying you a higher yield because the bond prices are lower. So when the bond prices go lower, the yields go up. I'm guaranteed. I bought U.S. Treasury yesterday. 30 of them. So that'd be what, $30,000. You do $1,000 at a time. That's what they look at it in hundreds, but you have to buy 30, so it shows up as 30,000. Okay. It cost me like 29,000 something. But I'm guaranteed that in 3 months it's going to be 30. It doesn't matter what it does. I don't care. So I'm guaranteed that. And a lot of people are doing that. They were talking about it yesterday. And I'd already been doing that. And back to the end of the world, it seems logical that the calendar would just start over for the Mayan calendar. Well, why are people taking the money out of the banks? There's more, or you can make more money in a U.S. Treasury. Interest is higher. So now guess what? Somebody suggested that maybe the banks, if they don't want to have all their people taking money out, maybe they could raise their interest rates on their savings account that they're giving their depositors. Woo, what a brilliant idea. Brilliant. Still not going to raise it to 4.5%. Yesterday's U.S. Treasury, I got it for 4.6%, 3 months. I like to do a ladder effect, talking about situational in your portfolios. I've been started buying these back in October when I saw that the yields were going up. I said, okay, I'm guaranteed this. So if you buy back in October last year, first month of October, November, and December, 3 months at December, it matures and you get your however many bonds you bought, you get the full price back. So then you buy one in November. Then in January, one matures, and you just I call it the ladder effect. So if I buy one every month, I have a U.S. Treasury maturing. I don't know, it's like $500-600 difference. That's not that much, Ken. It takes you 3 months to get $500. That's okay. How about, I've done that every month this year. It's 12 times $500. See, $6,000. Income, fixed income, guaranteed. $6,000 as long as the Treasury stays up around where it's at now. Or at the very least, maybe $5,000. In the money market, running around 3.74%. Wow, earning $300-400 a month. Another $4,000 or $5,000. So, not even counting the dividends in my portfolio. Just U.S. Treasury bonds maturing and the interest I'm earning on cash. And that cash is what I use to buy stocks with, but the cash is doing fine too. It's earning plenty of money. Doing fine. For me, I'm a small investor. It's not like I'm a billionaire. I have to be careful. I have to plan and get guaranteed stuff along with taking some risk. Buying stocks is a risk. It is a risk. When you buy a stock, because you don't know if it's going up now. You're doing the best of your research. You do all you can and try to get the best stocks. Okay. That's what I do. And as a matter of fact, it's a rare event today. Almost maybe not a rare event because 3 out of 4 days. Now starting back to Friday. And then Monday, not yesterday, but then again today is Wednesday. Every stock in my portfolio is green. Green, I like green. Nothing's red. It's all green. I like that. 3 out of 4 days. Every one of my stocks in my portfolio is up. And I don't have that much of a portfolio. I'm just trying to, all I care about is get enough money to take it out, enjoy life, and then supplement with that pitiful Social Security check. That's all I'm trying to do. So, since Friday, when everything went crashing that Friday morning, everything was all gloom and doom. So Friday, then Monday, Tuesday, and today, and today's not over yet. I've added $5,000 or $5,200 to my portfolio. Unrealized gain, of course, because I'm not selling it because I have them for the stock or the dividends. So that's pretty good. I'll take, $5,000 in 4 or 5 days ain't much. If you're a billionaire, you probably wouldn't earn $10 million in 5 days, but I'll take $5,000 gain in 4 days. I don't mind that in my portfolio. Because I'm after the dividend. I told you my situation is long term, and I want you guys to think long term. Don't get caught up in the news of the day. The stocks do move on the news of the day. It's kind of like you hear a noise and you run first and ask questions later. Sometimes running first is great. It gets you out of trouble. But sometimes you have to run away for it unnecessarily. That's news of the day. They react to exactly what they hear, and they either sell or buy it like crazy. Then maybe after an hour or two, when they actually read it and understand it and get into the details, they didn't need to run. Or maybe they shouldn't have bought it. They acted too quickly. So, have to be careful. Be resilient. And I just don't want you to panic. So. I want you to have some money in fixed income, have some in the money market. All your brokerage firms generally have where you can buy U.S. Treasuries. And they always usually have if they don't, see if they can find one, they have a high yield money market where when you put cash in, you got some in stocks and you got some in U.S. Treasuries, and you have your main core portfolio of cash, which is actually just cash. Just look at it as cash. Yeah, that's where I, like I said, I buy my stocks from. And because the day is the 29th, so tomorrow will be the 30th. That's why I bought that U.S. Treasury bond yesterday. I got one that's getting ready to mature in a couple of days. You'll actually get the money. Tomorrow will be the last day, which will be the 30th. And then when I get up on the 31st, it'll say I have a little notification on my account that I've had a treasury bond mature. It automatically does it, and it deposits the money into my account, into the cash account. So just be patient, do your research, and that's kind of like my portfolio strategy. So just maybe you guys are going to do something different, but that's what I'm doing right now, and it's working out pretty good for me. I mean, at a minimum of $5,000 in U.S. Treasuries right at the moment. Say $4,000 on the, or let's just say $3,000 on the interest on the money market. So $8,000 plus the dividends. I'm right now. I'm getting about $9,000 a year in dividends. So I'm stay the course. Now, and I look at these prices. If you get a cost basis, so once I start buying, I'll never buy one stock at the same time. I'm not going to buy 1,000 shares all at one time. I'll buy them if I want to buy 1,000 shares of a stock. I may buy it. It may take over 5 days before I buy it. So, geez, there's peanuts still all over the floor. I need to get somebody to clean it up. It'll probably be me. But anyway. And TFC, I own that stock. I bought that for, remember, I bought it when it was $30.50. The cost basis is $31.50. It's at $34.25. $3 up. I have to go from 30. If I take the lot I bought at $30.50, it's $3.75 up. Remember, be patient. If you have a good company and it's a good stock, buy it. It's like a Black Friday sale like I told you about when the stock's down and people are selling and you got negative sentiment. Everybody's selling it and selling it because it's got negative sentiment. Buy some. Make some money, maybe. It's worked out pretty good for me for Prudential and TFC so far. And I'm talking about my portfolio. So if you like Prudential or want to buy it, I wouldn't buy it right now. Probably it's kind of, this has gone up, and it's gone up $5.36. I guess it's still a good entry point around $80. I mean, it has a 52-week high of $122. So I think I saw some price targets over 100. So if the price targets are over 100, it's got at least a 20% move ahead of it. 10% of 80 is $8, and that's $16. That'd be 96. So it's actually more than 20% if it makes it back to 100. I hope it does. It'd be great. If it don't, I got that dividend. So anyway, the stock market's still up. 1:30 in the afternoon on the East Coast, 256 points. So all my stocks in my portfolio are still all green. That's good. So again, that's my little strategy for today. Well, we'll keep you guys tuned. Not a lot going on. Not a lot of news on the stock market today. Not too bad. We'll maybe get to talk about some aristocrat stocks and champion stocks for long, since the news has kind of settled down a little bit. So, like I said, in my portfolio, I've got quite a bit in fixed income, which part of that fixed income is U.S. Treasuries. The other part is the money market, earning interest on cash, and the stocks to get the dividends. So, hopefully your stocks will go up and everything will be good. So if you guys have a great Wednesday, any breaking news or anything, we'll come on and probably make a candid look at it. Sometimes you gotta pull the covers back and look under and see what's there. So, all right, you guys have a great week. Enjoy your Wednesday, and we'll see you for long. Have a good one.